Hey everyone, welcome back to Trading with Hariom, where we simplify finance so you can grow smartly. Today's video is all about portfolio management for beginners, an essential topic that often gets ignored, yet it is the foundation of any long-term wealth building journey. So now the question is why portfolio management matters. Let's begin with the simple truth. Even if you analyze the best company without proper portfolio structure, your efforts may not produce the result you expect. And this is where portfolio management comes in. It helps you align with your financial goals with the stock selection, allocation, and the monitoring strategy. Now, if you are a beginner, the first question usually pops up is how many stocks should I hold in my portfolio? There's no fixed number. But let me guide you with the principle followed by some of the best investors globally. Warren Buffett once said that diversification is the protection against ignorance. What he meant was, if you truly understand a business, you do not need to hold a 50 different names. However, if you are still learning, which most beginners are, some level of diversification helps manage volatility. In practical terms, holding 8 to 15 well-researched companies across different sectors is a good starting point. This number is not too small to expose you to unnecessary risk and not too large that it becomes difficult to track. Another crucial pillar of portfolio management is allocation. You see, it's not just about which companies you choose, but how much weight each one has in your portfolio. Beginners often unknowingly put a large portion into one name or a sector they emotionally believe. This can tilt your entire risk reward ratio of your portfolio. Instead, a balanced approach is spreading your capital across different sectors like FMCG, banking, technology, and healthcare. Gives your portfolio strength and stability. In my own approach, I prefer to stay careful. As a trader, I usually put around 5 to 8% in each stock in my entire portfolio. I already shared these analysis in my past videos, but later I removed. If you want to see that video, drop a comment, I will share the link. If we talk about the Warren Buffett's portfolio, he invested in few companies and his portfolio is called as concentration. He has access to deep research and timely information. This is not called as insider trading. He is in a good position to take the advantage. On the other hand, if we talk about the style investing of Mr. Ray Dalio, he usually invested around 4 to 6% in each idea. Mostly traders and investors follow this way. This is important to check your portfolio time to time. If you find something overpriced, you can change it. To understand this better, I will recommend you reading The Little Book of Common Sense Investing by John C. Bogle. He is the founder of Vanguard Group. You will find out all about portfolio management. Let's talk about monitoring your portfolio. Once your portfolio built, your work does not end here. Many beginners make the mistake of checking their portfolio every hour. Instead, you can create a GTT order or check your portfolio once in a day. I usually track my portfolio at 2 p.m. The goal is to manage your holding like a business owner, not a trader jumping from one screen to another. And one of the most underrated part of portfolio management is the patience. Give the time, you will create something good. Final thought from Buffett. Before we close, one last learning from Buffett's approach. He says it's a far better to buy a wonderful company at a fair price than a fair company at a wonderful price. What does this mean for your portfolio? Please let me know in the comment below. That's it for today's analysis. If you found this video helpful, please hit the like button, share it with your friends and subscribe to Trading with Hariom for more in-depth stock analysis. And please let me know in the comment below which stock you would like me to next analyze. We'll back in next video. Till time, happy investing.